it's a start of a new year.
Sure.
Well, you don't know whether it's a trend or this in a sense is just a one-day effect. But frankly, for 2024, the very basic approach, and I'm talking about next couple of days and next couple of weeks, is that you should not be on the front foot. I think it's time now to come back on the back foot. Don't leave the crease, but it's not a time where you can swing your bat just about everything. Here's the data. In the month of December, Nifty was up 9%, 14% in last 2 months. And I think there are two basic assumptions which markets currently have. One, that 2024 FIs will come back and they will continue to bid the market higher. That's conjecture. That may happen, that may not happen, but markets are really relying on that. Second, nobody is talking about the fact that what will happen to the earnings season. See, markets have got re-rated because of sentiment, because of not earnings or not because of the real trajectory change in terms of the market, in terms of the corporate earnings cycle. So the re-rating is largely because of liquidity and sentiment. The concern is if liquidity does not come, what markets are assuming from FI front, then we could be in for a vacuum. And B, I don't think the earnings season is going to be all that grand, which in a sense will really sustain this kind of a market momentum. So what happened in the month of November and December, I think is history now. It's time to look forward and ask yourself, is that what is next? And that whole quest to find what is next, I guess right now, there is nothing in the system which could really generate upside momentum. So don't leave the crease, but don't be on the front foot. You got, it's like last 2 months if you've swung a bat on just about every ball, you've hit it out of the park.
Yeah.
I think now it's time to really wait for that loose ball. Instead of T20, come back to the test match style.
Yeah. Having said that, risk assets continue their flurry, right? Look at what's happening with Bitcoin. It's staying above 45K.
So Aisha, look, I'm not making a case that there is going to be a reversal. All I'm saying is that you need to change gears now. The kind of uptrend what we've seen in the month of November and December, that is unlikely to sustain, and markets are assuming as if this rally is just going to continue forever. That's not going to happen. Now I think let's wait for some more time to understand which way global markets are moving, because for us it was day 2, but for global markets it was day 1. But day 1, the handover from global market is that mean reversion has started, which is on the crude front, on the dollar front. The positioning of the market is such that everyone is assuming FIs will be back, dollar will remain weak, and commodity prices will start shooting higher. If that assumption is challenged, then I don't think market positioning is really prepared for it. So I'm saying that don't be cognizant of risk. You should take risk when valuations are strong. You should take risk when markets are, when valuations are strong, earnings are going to be strong. I think a lot of good news is in the price. And I'm hoping that we see a market which consolidates in the month of Jan, because if markets do not consolidate in the month of Jan, then they could really reach what could be called as a frenzy level or a bubble level. So for markets to remain healthy, a bit of a churn, a bit of a slice from the top, a bit of a adjustment, I think is long overdue. And I think in last 2 days, we've seen the evidence of that. I mean, we are not talking about it, but look at the PSU stocks, how they reversed yesterday. The data which we have in terms of the short positions which are getting added. So slowly and gradually, just 2 days again, guys, it could completely change. But right now, I think I'm not excited about the month of Jan.
Messaging is take it easy.
Take it easy. Seasonality is not in your favor. You've had a good November, December. Don't go short, but don't be in a hurry to chase.
Yeah, maybe don't aim for those 6s and 4s either. Just take it easy right now. And just want to quickly mark what's happening across the globe as well, because the tech-heavy Nasdaq came under acute pressure last evening. You also had Barclays, which actually downgraded the Magnificent 7 to underweight, and that really played out on the Nasdaq. This morning, a lot of the tech-heavy stocks in Taiwan, South Korea, they're also feeling the heat. And for the most part, the Asian markets are under pressure. So demand concerns was the main reason as to why Barclays went ahead with that downgrade. But speaking of our markets yesterday, and it was a choppy day of trade to say the least, 21,700 didn't even sustain. It was a cut of about 1/3% for the frontline index. You had the banks underperforming ahead of the weekly expiry. And more importantly, the mid-cap index, that snapped its 7-session gaining streak. And you had pharma, which managed to hit a record high. So just looking at the overall texture of the market as well, Nikunj, and the kind of setup that we have with us at hand from the global cues, I wonder what the key takeaway will be.
See, January has not been a great month for us.
Yeah, see the seasonality.
The seasonality fact. And every time in the month of December, we get excited that come Jan, flows will come back. Flows do come back, but market tends to price that in. What has been the narrative post the state election verdict? That FIs will come back. They will be forced to come back. What if they don't come back? What if they come back and, we don't see the kind of commitment what markets are talking about? So again, I'm just going to repeat myself and I say the following, that it's time to go on the back foot. You should exercise some caution, take some chips off the table. If you book some profits in outperforming sectors like, let's say, PSU, industrials, some of the ranked manufacturing stocks, it's not going to hurt you. If you're in for a long haul, if you can digest a 15-20% volatility, if you're okay with, little bit of downtick in your portfolio, then just you don't have to be active. In markets, you don't have to be active all the time. There are times when you have to understand the trend, and I guess the trend and the indications what I'm getting when I speak to just about everyone is that don't forget risk. If the line I'm using, Aisha, for this year is, if luck made you money in 2023, 2024 it will be skill.
Yeah, and the brokerages are pretty much voicing the same, that it's banks, they offer the better risk reward and that FII flows will improve. Everything from a Jefferies to a Citi to Bernstein.
So what is the crux? Nobody is talking about, everybody is bullish, which means the Nifty targets are north of 22,000 to about 24,000. Within that, there is a play on domestic economy, which is everybody prefers industrials, everybody prefers financials, and select Indian, domestic inward-looking companies. But whether you look at the summary from Citi, you look at what indications you've got from Jefferies, you throw in a Bernstein report, I guess the common thread which ties all of them is that valuations are not exactly very strong. It will not hurt you if you book profits. We are in for 2023 surprised us, but 2024 you've got to be cognizant of election, events, valuations, and where the positioning of the market is. Aisha, I think next few weeks it will be all about sentiment versus earnings. Sentiment will be a function of flows, and
Earnings will be
a
the
function of the
reality
reality.
check. Yeah.
Which you look at the data which has come out, and the first initial updates have come out. We'll just flash them on the screen. DMart, VMart, the kind of indications which we've got from other companies also. This is just the initial setup, but look at that's Bernstein for you. I mean, that's some of the portfolio positioning. But let's look at the quarterly update. Do we have that? Just come up in a second. There you go. That's Bank of Maharashtra. Look at, for me, retailers are an important indicator. Banks are in a good groove. So banks may not be a harbinger of what essentially is doing, but look at, let's say, DMart, VMart. There is a bit of a slowdown. Auto sales numbers which have come out, they don't look all that exciting. So that's my limited point.
Yeah.